Good day, fellow investors. This time I want to discuss some comments that you have shared in the great comment section. So, very interesting situations that will perfectly explain the environment we are living in. So let's start with the first comment saying how value investing, I always say manage risk, Warren Buffett 3% treasuries. And then, yes, value investing is all for the rich, 5% with minimum drawdowns. And I have to disagree. We have done 15% with minimal drawdowns. Value investing is not low return, low risk. Value investing is low risk, highest possible return. That's a key concept that we have to discuss. It's hard to find now, especially in this market, but very important. Buffett might be having a 50% cash position to avoid the loss, and as we discussed, you have to be able to handle a 50% crash. A 50% of crash in a stock price is one thing, but complete capital destruction is another thing, and that's a huge difference. Everyone can tolerate if my business crashes 50%, I'm happy because I can get it cheaper. And Buffett's size doesn't allow him to play around like that. Now, a great comment here how the current businesses will be even bigger and still in the top 10 years or 15 years down the road. If you look at the chart there, these are the top 10, and that might have looked like that already 10 years ago. Only 5 are still there. I think Chevron is also out now. 4. So things change over time, and given the situation, I would not say that more than 5 in the next 10 years will be still in the top 10. Perhaps, who knows, because the world, given the technological developments, it's going very, very fast. We will see. Then the question is, how long can this market last? We have discussed that a few days ago, as long as the flows last. But that's exactly why I keep pounding the fundamentals. I don't care about the flows. I cannot predict when those flows will revert. I have to focus on the fundamentals and find fundamentals that drive my investment returns. As said here, we cannot predict, even if yes, at these valuations it's crazy to expect returns, but we can't predict what happens. And what will Sven do? Sven will reduce his hedges and increase the value if there is a 60% crash. That's the plan. So the question is, if everything crashes, yes, but then the dividends, the growth will allow you to be at a higher wealth level over time, no matter what happens. That's the goal. But it's a very difficult goal to discuss when you look at the other comment that YouTube gives me only 2 videos, you and Tom Lee. And if I look at a little bit here, I don't know, Bitcoin to 1 million, Ethereum to 15,000, the market going higher and higher. That's the Wall Street we are living in, greed going higher forever. And then the idea is it will never crash. The Fed will buy everything. Yes, that's possible. I was born there. We used to call it communism. So a lot of question marks to push everything higher. Target, might discuss that next week. We'll check. And that's my point here. Comment here is about I'm betting everything I hope to retire in 7 years, but that's exactly what I'm discussing. You are not allowed to bet everything and then see whether you'll retire in 7 or 13. That's not investing. And I see people gambling their whole retirement on that. Midterms, lower rates, going higher, pricing, $2,000 dividends, yes, they will push the market higher, but again, I can't predict that, depending on what the other side says. And then if I look at markets in general, everyone is discussing just the short term, stocks up, sticks down. Nobody discusses the long-term fundamentals. This is not fundamental. If something goes down, the prices will go up. Everyone is so bullish. Upside, 7 to 14% near-term upside. There's a discussion everywhere. On the other hand, we have retailers that are in cash, again, waiting to be protected. That's again a risk. I don't know, because cash is certain to get debased. As I said, if you can find value, then you invest. If you can't find value, you stay in cash. But don't focus on just stocks that go up. Because in this comment, when Berkshire drops 15%, then I'll go all in. But what if it drops 50 or 60? And this is when people focus too much on just stocks going up and down, this is a problem. So all in all, from the comments, from the media, from this and that, we live in a very, let's say, financial exuberant market, and that means we just need to be more prudent, as Warren Buffett said.